All right, boys. We are back this evening. I hope everybody's doing well in your respective places. So, in this video or in this call, I'm just gonna actually talk more about the charts, guys. We are going to back test. All right, we're going to back test, and actually, the main reason for this video is to actually journal the trades we took last week, and we know why we lost some trades and we actually won some trades, right? We actually going to understand. We actually going to understand each and every trade in depth and why we actually took it and why, if at all we lost, why we lost the trade, and if at all we won, why we actually won the trade. So this is what this video is all about, right? So without wasting much time, let's dive right in, right? All right, now, last week I mostly gold. I actually we remember, guys, we killed gold last week, right? So again, we need to recap the trades and as to why we won most of the trades in gold. So first and foremost, what you guys understood about last week's bias was that it was bullish, right? So all of the week you are looking for buys on gold, or looking for buys on gold, and because our bias, weekly bias, was right, we were right in most of the trades that we took, right? So this is one thing which is very okay about the bias. About the bias, when you guess the bias, not even guessing, when you know where the bias or where the weekly candle is gonna go, then you have already solved 80% of the problems. So your issue is now gonna be entries. You know what you're looking for, but you will now be looking for entries. So you should also be so keen and sharp in your entry so that you never get stopped out and the price eventually moves in your direction. So this is why you need to be very exact and keen in your entries. Right? You need to be sharp in your entries. You can even it's possible you can guess the weekly direction right, and you can lose most of the trades. Why? Because of poor entries. So you guys should work on your entries, and this is what helped me, especially in the forex markets, to actually have my edge. Is sniping entries, right? Guys, sniping entries. You always want to look for the best entries, and once you align yourself with the overall sentiment of the market, it's going to be very hard for the market to come back and stop you out and actually stop you out. So you still have an opportunity to do what? You have an opportunity to hold the trades even for 1 or more days, right? 1 or more days, because of you can hold the trades, you can just keep moving your stop to break even. This is what you can be doing, because when you eventually get stopped out, but if at all you guess the direction right, it's going to be very hard for the market to get you stopped out because it will just keep going up. Let's say in case you guess the direction is going to be bullish and you entered and you never get stopped out as early as possible, the market's just going to keep going up, right? So you can hold the trades and keep moving your stop losses to what? To break even. So let's check on gold. I think this was the first trade we took last week on gold. Let's analyze it and know why we took it. So when I think it was 4 hours, right? So guys, here was it. What was it? Gold was bullish. Then there is this order block, this PDRA, the order block. Gold came. The market actually came close or came around PDRA, which is the order block. So we expect a reaction, right? We expect for the market to reverse, having having got into a higher time frame PDRA. So this is what we should be looking for in the markets, right? We should align ourselves with the PDRAs and should wait for the market to actually come back and actually trigger them out, right? So, and secondly, one of the things you should also put in mind is the session at which the market comes back to actually mitigate the PDRA, right? Me, always recommend London session and New York session. If the market mitigates if the market actually mitigates a higher time frame PDRA in either New York or London session, then you would actually get yourself ready to trade and look for a very perfect entry. So this is what we saw. So the next thing we should check out whether it is London or New York session at which the PDRA was mitigated, right? So if at all you can go to the 1 hour, we come here. So here it was, it's here, guys. What happened here exactly? Here was the time at which the PDRA or the bullish order block was mitigated rather. So it was, if you can see the time here, it was New York session. New York session actually has the largest volume of the market, right? So what we should be waiting for is actually wait for the market to take out liquidity. If at all we can look at the markets here, this was the low. This was the last low of what? Of London session. So the market took out the liquidity and actually doing what? Pumping into the PDRA, the higher time frame PDRA that we have been waiting for, right? So here, when the market reaches here, this is where you should pay close attention, right? This is where you should pay close focus to the markets. Wait for market shift, right? Wait for a, a proper market shift, not just a weak market shift. Wait for a real displacement, right? So when we go to the 5 minutes time frame, here is the place, right? Remove this one. So here it is. What happened here? A displacement, market shift, which was caused by displacement, right? Huge candlesticks actually did what? Did cause the market shift, which shows that now the market is about to reverse from what? From bearish trend to the what? To the bullish trend, and it is at what? It is at the it's also at the bullish PDRA that we have been waiting for. So, and for you to confirm the market shift, what did the market do? The market took out liquidity from here, right? Took out liquidity, then went back across the market shift. Then see what the market has left behind. There are also two PDRAs the market has left behind from the 5 minutes time frame, which will act as your entry points, right? This PDRA should act as your entry points. What are the PDRAs the market has left behind? One, I just marked it, the fair value gap. Fair value gap is always one of the PDRAs that are well known for entries, right? Especially on the smaller time frame. Then the next PDRA is what? Is this order block. This order block. Remember, what did the market do? Let's say you just entered from the fair value gap like I did. Where should your stops be? Your stop should be below the order block, because you never know, the market will come. You will come once again and pass the fair value gap and now mitigate the order block, just like it did here, right? So you should actually put room. I should actually allow some breathing space for your stop. That's why it's allowed for you to put your stop loss behind or below the order block. So this is what happened exactly. So I hope you guys are understanding very well, right? So this is what happened. The market came inside the fair value gap where we entered, right? So the market took out this high. When the market took out this high, we do what? We move our stops to break even, right? We move our stops to break even to secure our position, right? So we moved our stop loss to break even, our entry position initially, right? So what did the market do? The market reversed, almost took us out from the what? From the from the break even where we actually put our stop loss. But eventually, the market did what? Reversed. And if you can see here, why the market came down here, came to mitigate this order block. The market came all the way here to mitigate this order block. This is why we actually, that's why it reversed all the way from here. Now it went up and actually hit our stop loss eventually. This is how we actually took this trade and won this trade. I hope all was good for the week, right?